All right, welcome to the Cash Flow Conversations podcast. Today I got a special guest, a good friend of mine, Trent Fortner. Quick background on Trent. Trent has 35 years in the financial industry. 15 of those years, he's been coaching some of the top producers in the United States and Canada, which is kind of unique. You don't hear a lot of people doing that. He is the founder of the Game Time Coaching Program, the Courageous Advisors Mastermind, which I'm part of. It's a great group, and the Producers Movement, and the $100,000 Challenge. He's been married for 32 years to his wonderful wife, Krista. 43 of those years dating, which proves that you know how to vet something very thoroughly before you make a good decision. And a father to three great sons who he's very proud of, one of which is a good friend of mine. And I still don't think he shaves, but he's a really good advisor.
He actually does. It just takes a little while.
Well, it's
But
good
he
to
got,
have
I tell you, he got that from me. It took me till age 40 to be able to grow any facial hair.
you. Was it really? Man, I
Yes,
had
he
this
did.
at 12 years old. I was shaving my beard.
Yeah, looks good. All right.
It's good to have you here, man. I know you've got a lot of experience in the financial industry. I want to kind of go over some of your background because not everybody wakes up or graduates high school and says, I want to be a financial planner. I want to help people grow money. At 18, 19 years old, we don't really understand a lot about how money works. So I want to understand, the transition that you went from, your first few jobs into the financial world. And then I want to talk about some opportunities and some problems that you see that investors can either take advantage of or should shy away from.
That's a good
So what
question.
was what was your journey like into the financial planning world? Usually people have like a pretty unique story, whether it's a family member or an incident that kind of triggered them to join.
Yeah, I appreciate you asking. First, I'm honored to be here, so thanks for having me. I've enjoyed watching you and your family grow, so it's a lot of
Thanks.
fun.
Thank you.
I started thinking I wanted to be an accountant, and that's what I majored in college. And I avoided the insurance industry like the plague, and I did. I did because I watched my father have an experience with a life insurance agent that, on the side that I saw it from, which was my father's perspective, that it wasn't a good relationship. That the guy was telling him things about this permanent insurance that didn't sound right. My dad was an engineer. He had his slide rule out, trying to disprove everything, and he was convinced he was right. And he bought a little bit of term insurance. But I remember like it was like an argument. He invited me to sit in on the meeting. I was probably, I don't know, 14, 15, something like that.
Yeah.
Didn't quite grasp all that at that time. I got into the accounting field. My first job was as an auditor for the state, which was
Oh, that's
just,
fun.
oh no, 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 not at all. And I was in these really small towns in West Tennessee, and before we were an auditor for their municipalities and their schools, and I'd show up and I'd have people confessing to having kept the water revenue where they collected in cash because they had some terrible thing going on in their home. Maybe somebody was really sick or something, and they would confess to this 19, 21-year old that, man, we stole money and we've been trying to get back. We just can't do it. I'm sorry. And now it's
Wow.
our job to talk them through that, and that was terrible. I hated that. It didn't
Wow.
always happen, but it happened a lot, and I never really enjoyed that. And I had a friend of mine who convinced me that I should look into the insurance field. While I was still in college, I had a real estate license, which I really enjoyed, but it was a terrible time to sell real estate. I
What
did
year?
sell a few houses. What
I'm going
year?
to expose you here, but yeah, what year was that?
I graduated in 87. I was selling real estate in 86, 87, 88. Tough
Yeah,
time.
tough time. Market
Um,
wasn't doing well.
wasn't doing well. And I was what, 8, 19, 20? You know, didn't own my own home yet, so that was kind of tough. I did sell a few houses to friends. And I also, this is what I call my really real first hard job. My first real job was as a filter queen vacuum salesman.
Interesting.
I learned more from that job than any job I think I had before we got in the financial field. And by the way, I learned to be really good. I was, they offered me while still in college around $70,000 to come in and be the manager, the sales manager.
Wow. And with inflation that today, that would be well over six,
Yeah,
150,000.
yeah. And I was earning about, my wife and I were dating then, right? We started dating as freshmen in high school. I was bringing home up $2,000 or $3,000 a week because I would hit my bonuses. If you sold five in a week, you'd get a big $2,000 bonus.
Wow.
I did it week after week after week. And you're talking about people today. I mean, that's a 70-year-old today. It's a 70-year-old system that's still being sold, and it was like $1,800.
Wow.
That was tough, but people
Wow.
bought it. But I learned about communication and what people really, that if people really wanted something, they would get it. So, I'm sorry, I kind of rambled there. So, but I got into the insurance business, and a cousin of mine was one of my first clients.
Well, really quick though, because this is what I think is so. I think people gloss over it and they take advantage because that moment of when you went from wanting to be an auditor and getting a job, you experienced the job and didn't like the process of the job. Now you're exposing these, not super wealthy people who are trying to like rub two nickels to make a quarter. And on the side, you went and got a sales gig in real estate, and then you got another sales gig, and you realize communication with people. And the old Zig Ziglar saying is, if you help people get what they want, you're bound to get what you want.
That's right.
And it was cool. So that was kind of cool because you had some pretty quick success then in the sales industry, learning communication.
Learning communication, that's right, and learning to ask questions, better questions. Now I had success there, but I had all these people telling me, "Man, you don't be a vacuum cleaner salesman. You need to do something else, right?" So, what was the step up? The step up was an insurance agent,
And
and I
then
was
cars, or what's the third
well. I
one?
did that too as a coach later to learn how to coach. I'll tell you about that. So as I got into the insurance business, I started with Nationwide Insurance, and the best thing is I started with a problem. The problem was there's two problems here. So as soon as I got started, one of my first clients, my cousin, was killed in a 2 blocks from his house. His wife's pregnant. And they had a young child in the back. They were hit by a drunk driver 2 blocks from their house over by the airport. I had happened to help him, not necessarily on a policy I sold him, but on his group benefits. He had something small for me, but it did provide for them a lot more than what he had. And that was as soon as I got in it. But the guy that recruited me there said, you know, people your age think they're invincible in their 20s and 30s. And I was an athlete here. I played baseball, so I knew a lot of people in the area. He said, you need to talk to those people. And remember, I had that experience with my father. I'm thinking, this is not what I want to do. This is not what I want to do. But I started doing pretty good, and then I got injured. I just bought my wife and I, she wasn't my wife yet, we just bought our first house. It's a rehab from a foreclosure. We were fixing it up. I was going to live in it till we got married. And I injured my back, moving furniture back. Had 2 bulging discs. I was down for 6 months. 6 days a week, 2 hours a day, somebody would come get me, drive me to therapy, and chiropractic and therapy and all these things, and they drive me back home. I was on the couch for 6 months. It was 6 months. My validation schedule kept going up, right? But I wasn't. I couldn't sell from the couch. So Nationwide gracefully let me go, right? Well, I understood that. Well, the same person who recruited me there, he had moved to Guardian Life and said, hey, I believe in you, you're getting healthy, come on, work with me. So I did. And I survived as a great sales manager in my early stages because, and I'd say that facetiously, because I learned the software. And
Really?
my manager, my manager title, first year with Guardian as a manager, I was fortunate enough to have the new agent of the year and the agent of the year in my unit. I was a glorified assistant. That's what I was.
Cool. And you said it's because you learned their software?
I learned Guardian software and illustration software. So I won the Presidential Citation Award as a manager when really all I was doing was running illustrations for other people.
Wow.
Yeah. So I was ready to get out of that business too, because I'm thinking, one, I'm getting accolades for something I really didn't do, so I didn't feel like that was fair. And I didn't like being everybody else's assistant, but I saw the value of the business. I just still had this thing ringing in the back of my mind about life insurance. Permanent insurance not being this great thing. I still had that experience going through my head. And I was introduced to the LEAP system in 1992, Bob Castellan. By the way, when I got injured, I ended up going through a bankruptcy to keep my house. This is before we got married. How about that? Before we got married. or
It's a nice way
soon
to
after
start.
that. Great way to start. I just bought my first house, engagement ring, and truck. You know, my new Explorer when it first came out, and saw that go. My wife, well, we were married, so she stuck with me right through all that. So come on, we'll get it, go to work.
Wow.
So the two best sales I ever made was one, finding the right lady to marry, and two, when I had to get a leaf license, I didn't have the money. You had to pay a fee, a licensing fee. It's like $3,000. I didn't have it. Her mother loaned it to me to get started. How about that?
Wow.
Terrible start. But I had good people around me then, still do. And within a few weeks, I was able to give that back to her. But I learned the LEAP process and I understood it because of all the troubles I had been through already. I saw people who, as you said, rubbing two nickels together to get a quarter. I went through having new or no assets and getting injured and seeing things being taken away because I didn't have disability insurance. I just started. I didn't have those things. I didn't have assets left. And so I had to go get well and go make things work. But I understood the financial model that he taught on the flows of money and who really controls money and the language around teaching consumers how to play the game. And it was the banks, the government, and Wall Street.
Yeah.
I understood it immediately. And
Yeah.
I grasped onto the flows of money. Your company, Cash Flow Architects, your approach. I learned that approach in 1992 with that model immediately. And because that I did and understood that, I then added the principles in my own life that turned things around very quickly for me at that point.
And so you said LEAP. What does LEAP stand for?
Lifetime Economic Acceleration Process. That's a
So,
system that's been around for 50 years now.
and truth be told, I've been doing this for 13 years now. It's 2023, and I came from an architectural background. So architecture is this great idea between principles and subjectivism. I want to make the building look cool, but I have to follow the rules for it to stand up for a long time.
Yeah.
And so when I got involved in the financial industry, I saw these advisors throwing darts on a board, just selling stuff because they're supposed to sell stuff, and so that turned me off so much. When I fell in love with the industry was when I found Leap and the model,
Yeah.
because I could draw it out with pens and straight edges and talk about inflows and outflows and taxes, and now there's a visual that I could see on a one piece of paper. That changed my perspective on money too, so that's pretty cool.
That is cool.
And so when you saw Leap, that took you to the next level as an advisor, and you
And
saw
as a
some pretty
bank,
as an advisor, and you saw some pretty quick growth in your business, right?
I did. With in the first 20 months, I realized that because of the process, if I saw the right people who wanted to improve their financial lives without any additional expense, without any additional risk, and wanted to take control of their own dollars, if I saw them consistently, 3 new people a day, 3 days a week, that the potential for me to help them would be to add over $1 million to their life by creating new strategies without it costing them anymore. I realized if I followed that formula, I had the potential to earn $1 million a year if I saw enough of those people.
Yeah.
Now, I'd never come from money, so I didn't, I still had to believe that. I still had that story. Remember that story from my father about permanent insurance is bad?
Yeah.
I was able to it was proven to me that he was wrong. Now, get this, after doing this for about 3 years, things were going so well with that system that they asked me to be a national trainer for Leap. So that means I started training agents all over the country. In fact, I
Did you
was the
call your
first
dad?
trainer in Canada. Yeah, it was fun. Well, guess who shows up in one of my classes? The agent that had met with my father.
Wow.
And when I learned this, I've got to apologize to him in that meeting, and really thank him for what I learned and going back to that and how that story actually almost kept me out of the industry, but it now has pushed me towards seeking truth. So that was a valuable moment for me.
I think really quick, I don't want to gloss over this because there's a turning point in all of us when we go, I want to invest in myself. And a lot of people don't know how to start that. because we have these preconceived notions of what my ceiling should be based on what I know. And here's your dad teaching you something. As an engineer, engineers are not stupid. Engineers are very smart. And as Bob Castellone says, you can't let the numbers get in the way of the truth.
That's right.
And
Really not
and you,
nothing.
I think your advantage was that you went through those hiccups early on. Because as I joke with your son, young people, like you said, they're invincible. Really quick, if you're under the age of 40, you never really owned real estate and saw it crash in 2008. So for the last 12 years, you saw real estate do nothing but go up. And they've never seen that volatility, so they think it's perfect. When you have a prospect or someone like that, it's like you can't help someone that doesn't want help. And so I kind of walk away from that all the time because they think that it's a home run every single year. And so by seeing the failures of a traditional or what most people consider to be good financial advice, and that was I think that was your leg up. Probably hard to see it at the time.
Yeah, that was definitely one of the things. And throughout life, I think really, not just me, but all of us, I think we don't really learn when things are going great. We learn when you're faced with a problem. When you have what I would call, I was in a coaching call this morning, when you have a defeat, you're either there's not really wins and losses. What there are wins and learning if you want to frame it so that you get better. And we always have a choice, but sometimes people mentally, physically can't overcome a loss or defeat. And what that did for me, I think I'm going to give baseball credit for this, is, that's a game of adversity. That's a game of failure. That's a game of, if you get 3 hits out of 10 at bats, you're Hall of Fame. So
Yeah,
7 times you're expected to fail
yeah,
or more. So what I gained through that process was to be able to continue to find a way to improve. But here's how I was able to do that. I don't know who taught me this part, but I was able to learn to ask better questions of myself and then of the client. Things like, what do you want to make sure does not happen to your money? When they would ask me, what do I do with my money? Well, what do you want to make sure does not happen? Well, usually they say, well, I don't want to lose. Well, then we need to evaluate where your money's at today to see where those losses are occurring. And if all I can do is stop the losses and then put that money back in your life, would you want to know how to do that? Nobody objects to that. They all
you
would
use
like it.
and you use my favorite word. It's 2 letters. If I could show you how to do X, Y, Z.
Yeah. What
Interesting.
I like about the process that you teach and what we teach is, that word if. I like that word too because it opens your mind a little bit. But if is a small word with a really big shadow, right? If keeps people from doing things as well because they don't. You said this very well just a moment ago. I don't know if you meant to say this, but people have what they have because of the limitations of what they know.
Hmm.
And so our job is to discover what are those limitations so that if they know that there's a better path, do they learn a truth that they did not know was true before, would they like to take advantage of that for themselves? And so we design those strategies. And because of the planning that you do, the planning that I'm able to teach people to do, we eliminate the if and move that to a win, W-H-E-N, so they then can have the certainty to win, W-I-N, instead of hope and, the financial strategies of hope and prayer.
Yeah, I love it. So you've been able to coach advisors following along some of your successes. A lot of it, you said in the beginning, came from the illustration software, understanding the numbers. I think most of your skill set also is what you learned as a vacuum salesman in the conversation. You marry those two together, and now you have a recipe for success. So for people starting out, it's like you don't have to be great in the beginning, but you should find what you're pretty good at and partner with somebody else. Like when you knew the illustrations, you weren't the one out there talking to clients. You just helped the guy who could talk understand what to say and why to say it.
Mm-hmm.
And when you could stand up again, when your back was healed, you started to crush it. Leap asks you to be a national trainer. You like the idea of coaching advisors to be better for their own clients. I love it. So let's talk about the financial industry right now. You listen to the guy that lives near us. His name rhymes with Shmay Damsey, and he talks a lot about retirement plans. He talks about mutual funds getting 12% rate of return. talks about being debt free. When someone wants to control their wealth right now, what do you see some of the best decisions that they could make based on what's going on in the world?
Well, one, the control part. Uh, I think you should invest more in yourself, and in the investments that you allocate your own earnings and savings towards need to be something that you can control the outcome of. I'm sure Amazon is a well-run company, but I don't know anyone who runs Amazon, right? And I don't know that it will always go up in value. I'm sure the American funds are phenomenal at what they do, but the financial institutions don't create strategies for consumers to win. They just create the lessons and strategies for you to stay in the game forever.
That's
They get
interesting.
paid for you. Yeah, they get paid for you to be in it. If you follow the four rules of financial institutions and you study them, they want us as consumers to give them our money on a consistent basis for as long as possible. And then when it's time for us to take it back over as long a period of time in as small increments as possible. And they will put rules around the products that they offer that would strongly encourage you to follow those rules, or you get penalties or taxes or something like that. And then it's sold in such a way that it sounds like that is the thing you should do. And then there's this common knowledge. It's not really wisdom. It's common knowledge that people follow because everybody else does it. Matt, your financial life has zero to do with my financial life unless we're in the same family.
Yeah.
Right. So if we're meeting in the locker room and I'm asking you, what are you doing? How are you doing it? And you tell me, if my circumstances, the context of my financial life and desires and age of my family and all that is not fitting yours, then me following exactly what you do as a whole would not necessarily cause me to win, unless there are some basic principles you follow. These are those things here's the answer to your question. One, I need to make sure that I'm saving at least 15% of my gross earnings into my financial life, just to keep up with taxes and inflation and planned obsolescence and lifestyle creep and all those things. Just at a minimum, 15%. I need to be able to protect everything that I invest and save in, and to be able to protect my income and replace it if I'm no longer here for my family until normal retirement age. And if I do that, I then, in totality, need to be able to create a return of at least 15%. Now, does that mean I go and take high risk to do that? No, not at all. I don't try to get a single product to earn that kind of rate. I'm not even looking for it. I'm happy with fives, fours. If you give me 3 or 4, 4 or 5% rates of returns and the ability to move, access to capital, to find a better approach, I can turn those into 15, 20, 30, 400% rates of returns in a transaction that then I put back in my life and keep more of what I earn, and then earn more on what I keep. But it's not haphazard, and I'm not giving up control to other people to do that. I have done that in my life, and it doesn't win. I've lost big time doing that in the past.
That's funny. My old podcast was called Earn More, Keep More.
Oh, didn't know that. Very good.
That was years ago. But okay, so you kind of hit on something, the idea of principles of money, which are not taught in school. I haven't used the Pythagorean theorem since I've graduated high school, but I know a squared plus b squared equals c squared. And I have to do tax returns every year. I don't know why, never learned how to do a tax return either. So the principles of money, for me, that was a moment of liberty. Because I didn't have to get creative on solutions anymore. They already exist, right? I just got to follow those rules, protect myself, protect my family, protect my income. Now I have permission to go take risk. By the way, I'm not talking risk of like putting all my money in somebody else's business in the form of a stock on Wall Street where I'm paying some advisor to guess and gamble. I want to invest in myself. So those principles are huge. So once someone understands the principles, and how do they understand the principles? Do you walk them through that, like,
Yeah,
an entire meeting? Is it a 10-minute conversation? Is it a process that they go through with like a questionnaire?
it's a process. If you were to ask me if we were going to have this meeting in person, you say, "Hey Trent, how do I get to your house?" I got to ask you where are you now, Matt? The GPS would do that too. You say, well, "Where are you starting from?" Right? Before you figure out how to get here, and then there might be roadblocks, detours, all those things along the way that you might have to make some changes to your path. So it takes a little while, but the hard part is for the consumer to fill out the questionnaire. They all have a lot of stuff, usually, and they bought it at different times from different people for different reasons, and it most of the time it's not working together. Our job in this process of teaching them, one of the other principles that we teach is called velocity of money. So we have to get $1 to do the job of $3 or $4 at the same time. And if we can do that and failure not be an option, why would you not want to do that?
Yeah. Yeah, no, that's a great question. And I love the way you said it's a GPS. I got to know where you're starting from. How can you help someone with a questionnaire then? Because that's always a source of trouble for a lot of advisors. We had a great meeting. I sent the questionnaire, but dude, I'll tell you, I'll be honest. We just bought a house a few years ago here in Franklin, Tennessee, in Nashville, to get the paperwork for the mortgages. I'm buying a house that I really, really want, and I still didn't want to get all the paperwork together.
Yeah.
So how can you make that easy?
How can we make it easier? There's a couple of ways. One, you can do something online and scan all the documents, and we can help you fill it out, or it'll populate. If you go through a certain system, it'll populate for you. But let's put more value on why you do it. So I'll tell you a story. So this is a true story. I don't remember what year it was, probably 20 years ago. I'd walk into my conference room for an office, in my office for a meeting, and there's the other agent, my assistant, and the husband and the wife. And I walk in a little bit late, and they're crying. And I said, guys, what's up? What's going on? He said, well, Trent, we rescheduled this meeting about 3 or 4 weeks ago. I said, I remember that. He said, we probably don't know why. The husband's father had passed away. The meeting that they were at to see me, we were handing them back all of their financial documents in just a plastic box, but it was organized, very well organized for protection, savings, and growth and everything that they had, tax returns, mortgages. He said, Trent, I just came back from the funeral for my father with my mother and my 3 sisters. We spent the entire weekend trying to find documents to get to the funeral home so my father could be buried. We had no idea where it was at. He said, you have no idea what this box just did for my family. And I didn't. I really didn't. I'd already been doing it for 6 years. I didn't understand that value until then. So when I talk to anyone, I say, whether we do, you and the advisor, I don't sell anymore, but whether you do business with our team or not, just going through the exercise of knowing where everything is to share with someone else that's in your life that you share life with will remove an enormous amount of stress. You need to go through that exercise. I never get objections to that.
Yeah. Well, you never realize how important that is until you actually see it.
Yeah.
And it's life-changing.
Yeah. Today,
I have a hard time with my family. My dad's in the profession, and my mom grew up in a family that you don't talk about money. So she's carrying on that legacy.
Yeah.
And it's hard. We don't know anything.
One day you'll find out.
I try to tell them that, but again, you can't fill a cup that's already full. And
Let me ask you a different question about that. So if you're talking about to a consumer, a client, potential client of yours, when is the worst time for their accountant to meet their attorney to meet their life insurance agent, the property and casualty agent to meet the family? When's the worst time?
death.
It's at the end of life or after a claim of something.
Yeah.
So shouldn't you have the team, at least somebody on the team that's able to coordinate all the information and
Yeah.
communicate?
Yeah. That's why I like the name of my company, Architect, because as an architect, you deal with the consumer, and you deal with the contractors, the general contractor, and all the trades. And your job is to organize all of that. And here's the plan. Nobody's digging a hole until everybody understands the entire plan. So that said, insurance you've mentioned a number of times on the call. Most of the people that understand what I do is I help people invest in themselves through taking control of their assets. And one of the best ways to do that is permanent life insurance, because I can use that money over and over again, which you're a huge advocate of, right? I mean, I've been doing that for
Absolutely.
30 years now.
Yeah, since '92, however long that is.
Let's say I have all that set up. Let's say my attorney knows the CPA who knows you guys. What are the next steps? What are some opportunities given today's environment, which in the last 12 months has become quite different than we've seen in the last 10 years? What are some opportunities to take advantage of, and then what are some things to shy away from that you think might be kind of sketchy?
Let's go with sketchy first. Sketchy would be anything that you don't have any wisdom of, that you don't have experience in, that you don't have control in. That could be, for me, that, I'm just saying what it would be for me. So for me, I would not get involved into crypto. I know nothing about it, don't really want to spend any time on it. It might be the best investment in the world for some people. It's not for me.
Yeah.
I'm not buying stocks in companies that I don't have some control of the outcome.
Yep.
I'm not, I, I'm a big fan of real estate, but right now it's difficult if you're financing the whole thing with banks, if you're doing mortgages, because the rates are higher. But what I'm coaching people on at the moment, what we're doing is we are using our life insurance to buy lower priced homes that have good rent. We look for the cash flow. We might finance the whole purchase through our life insurance, not just a down payment.
So
So that would be
so you
100,000.
so you put money into a policy, death benefit goes to the fam. You buy a house that generates good rental income, and the rental income can go to your dinner or right back into the policy so you can do it again.
Yeah, it's a great way to say that. So one of the examples I give often is a strategy that we've had. Now I've done this a lot over my lifetime, but a recent one, we bought a home in Ohio, and we have a property manager who's a client of ours, and it's a $42,000 house. Well, if I moved 42,000 from my savings account, checking account, and put it to the property, and I got the rent of $8,400 a year, that's a 20% rate of return. That's a great return. I don't know anybody that wouldn't want that.
You
But
haven't
I know
even written
something
tax benefits either with that, right?
you don't get as many. That's true because you pay cash that way, right?
Yeah.
So you forfeit. You don't get depreciation. You might get management. You might get taxes. You get insurance, but you don't get depreciation.
Okay.
But I knew something about leverage, right? And I have a life policy, several. And I have cash value, and I had more than 42,000 in cash value. So I created a loan against, not from. That's an important word. Against the life insurance policy. So my money kept working, earning whatever it's earning, 3, 5, 6, whatever it's earning
In the policy.
in the policy, without being interrupted, not coming out, not affected. They loaned me $42,000, not my money, the insurance company's money, right? My policy is the collateral for the loan. They loaned me the money. At that time it was 4%. That's a pretty good rate anyway. But now my cost to get an $8,400 return is not 42,000. Now my cost is that year's interest to move the money. So my cost was $1,680 to get $8,400. That's a 500% return.
Say it again, just in case it cut out. Say it again. How much?
My cost was $1,680 of interest to purchase income of $8,400 on the real estate. That return was 500% in that year. You divide the 8,400 by the 1680 investment.
And you still got your boring 3% in the insurance.
Yeah, it's still growing, right? And now the tenants, they pay us because my manager is in charge of that. I don't get a phone call for a leaky toilet or a bad tenant or anything like that. They handle everything. So the $8,400 comes in. We're paying all principal back until we tell the insurance company how much of this we want to pay towards the interest, because they only charge you interest for the amount of loan outstanding. So we effectively could reduce the amount of interest we pay, but let's just say we pay the whole interest rate. So in year 2 of having done that, if I applied the balance, there's like $6,800, I think, that paid down my line of credit. So I went from 42,000, let's say 35,000. So in year 2, my interest is less, my income remained the same, 8,400. So my rate of return went up, right? My line of credit went down. It took about 39 months, takes about 39 months for the tenants to have repaid that line of credit if I'm using it at that rate. Cash value is going up. 4 years later, it's twice as much, maybe more than that, because we kept paying premiums. We had dollars coming in. Another house came up, 65,000. So we do it again, but this time we have 2 properties that can pay down the line of credit. So instead of having 8,400, we've got, this one was 9,800 to rent, so now we've got 18,000 to pay it down. So now it might be 26 months to pay off that property. How many properties could you build that way? Now you also have equity in the property. These are not highly appreciating assets. These aren't. These are for income.
Right.
But we've done it with properties that are 350,000. My office building I bought years and years ago, I did it for the down payment of 200,000. And there's lots of ways to administer that because you have access to capital. Here's the other thing that's real important, especially right now. You're going to see a lot of foreclosures come on the market in the next 12 to 24 months. We had a moratorium on it from COVID for a while. Now people are trying to work plans out, and now we have a tough economy. People are losing their jobs. Inflation's high. You're going to see some opportunities to either help people stay in their house or to buy homes they couldn't keep. So you might find some deals on some real estate because right now the inventory is still low, but because of other interest rates, a lot of people aren't in the marketplace yet. As soon as they lower the rates, it's going to be everybody's bidding on properties again, right? If you have access to capital, and this is what I told the guy on the $65,000 deal, I said he wanted 70. I said give me 3 comps, but I can close in 3 hours because I could get access to capital. Now I can't get capital for my life insurance in 3 hours, but I had it in my savings account, so I could write the check and then take the loan and put the money back, right?
Yep, 100%.
So that's the control feature.
Okay, so I want to
And
spend a minute on this because I think you're talking about one of my favorite subjects in how to create cash flow. When you took the loan against your life insurance, certainly you had debt service every month, right? Did you have to repay the loan?
No, I could do it on my own schedule.
Oh, so you control the way you pay back. So because you have a loan outstanding, though, certainly it showed up on your credit report.
Not with life insurance. A non-credit scored loan. It's private, protected by the HIPAA laws and the IRS.
Well, okay, so it certainly hurt your debt to income ratio and your ability to get a loan from a bank, right?
It doesn't show up that way because they consider it as cash.
Geez, so you're talking about a loan that doesn't have a repayment schedule, that doesn't show up on debt to income or affect your credit score or ability to get a loan that you can repay on your own time.
Sounds like you've heard this before.
When you can get a 500% rate of return on an asset that you can control and perhaps visit, if you bought an Airbnb, you could go visit. I love talking about a 401 cottage versus the 401k.
Yep, yep. At one time I had a 401 jet. So
Well, that's give me
interest
another
in-
nonchalant. How many jets you got here, Trent?
I don't have any at the moment, but what we did have was we had a fractional interest in a jet. And so instead of putting money in a 401k that I couldn't use, I invested in a jet that allowed me to go all over the country to do business in a faster time. Now, because of Zoom, you don't necessarily have to do that.
Yeah, Zoom's a little cheaper than a jet, but one is definitely more fun than the other, and I'll let the audience determine which one is more fun.
Yeah.
That's pretty cool, man. So, 500% rate of return, and you could literally build a whole portfolio just by doing the same thing over and over again. One thing entrepreneurs, after you're successful, you get bored, and you look for something new to do, and that's where a lot of failure comes into play. Turner Thompson.
Yeah.
He used to always talk about we back in the 90s we would do this and it worked, so we changed.
Yeah. Yeah.
But if you're saying one of the strongest things you can do in any economy is to invest in something that you're familiar with, why not wash, rinse, and repeat? And for some of the people listening, they know who a guy named Alex Hormozy is. Hormozy has done phenomenal in the last few years, exited a portion of his gym company for tens of millions, and he started to be kind of like a VC and look at these investment opportunities. And after 12 months, he's like, I'm not doing this anymore because I don't know the business model.
That's right.
But he had to go through the experience to go, that's not for me.
Yeah.
And experience is what you get when you don't get what you want.
True.
And so now he's back into what he's familiar with, and he's doing phenomenal.
Yeah. So let me address that for a moment. This is something I've learned over the last 35 years, but especially the last 15, is building massive or building wealth of any amount is really not about interest rates and numbers. It's about behavior. And it's about you modifying the outcomes of your money's behavior to match the behavior of the life that you want to have. And not having to wait years and years and years and look over the fence, climb up top the fence, peek over it to see if my money's growing, to know and have access to it. And there's a big difference between contractual wealth and statement wealth. Statement of wealth happens to be what you have on the day that you go see it, and that could go up or down with measures of risk. And risk really, in most instances, is by definition is the probability of loss, not the likelihood of gain. And so I contend that most people are playing a financial game, investing in things they do not know how it works, does not know what the expected outcome is, has zero control, and to me that's gambling. Gambling should be for fun, not for livelihood, unless you're a professional gambler. And those that I've met are professional gamblers. There's a point where they have a whole lot less or nothing at some point in their life.
I like it. The risk is really just the probability of loss.
Yeah, yeah. Why you mentioned this a while ago? You're an entrepreneur. You have your own business. Why would the best investment you can make would be in you? You already took all the risks to go into business for yourself. You put your reputation and your family's assets and everything on the line when you go to business for yourself to go serve other people. Then you earn this money. It took a while for you to earn this money, and you go say you're going to tell me, hey, my returns in my business is not good enough. I want to go to some investment portfolio and go put it over there with someone I don't know to manage money for a chance of winning versus what I know I can do in my own business and my own assets. That has never made sense to me.
But Trent, the guy has his name monogrammed on his cufflink. He surely knows about how Wall Street works.
He's in the game, that's for sure.
I think
I
you're going to see less and less of that too.
Yeah, yeah. I want control of the outcomes to the best of my ability. I want to mitigate risk and taxes and fees as close to zero as possible, and I want to have the ability to move when things happen to the economy so that you could be in control. You'll be a better buyer if you have more cash. Right now, I would tell people, you ask me what am I telling them to do, store as much cash as you can right now. It's not, cash is not trash. Cash flow is king, not cash. But what we want to do is we want to be good at finding times to put money in places where you do not lose. If you follow Warren Buffett, he's got two really strong rules in the investment world.
I love him. Hit me with them.
Yeah, rule number one is never lose money. Rule number two is always refer to rule number one.
I love it.
Yeah, so he also uses something that applies to what we talk about right here, and you did it a moment ago in cash flow and leveraging policies. So they talk about the float. He does this in the annual meeting of his stockholders for Berkshire Hathaway. And the float to them, he owns Berkshire Hathaway, Geico, some other insurance companies through that company investment portfolio. The float is the time between they receive a premium and the time the claim is made and how they get to use that. As an individual, you have the ability to do that with your life insurance policy. The deposit that you would make, the premium deposit or the paid up additions you put into that policy is your asset until a claim is made later on the death benefit. And if you leverage the policy for access to capital to go get something else, you're leveraging a future event and using it today. And you're matching a guaranteed event, the end of life, not the if. This is when, not the if. The guaranteed event of the end of life with a guaranteed contract. And along the way, you get to have access to it.
I love it. So you're all about control and cash flow.
Control and cash flow.
I love
Control.
it. So, all right, hit me
Every
with.
time I've given up, I'm sorry, every time I've given up control, I've lost.
Yeah. Yep. I love it, dude. We're coming up on 40 minutes here. Any final thoughts before we get out of here? I really appreciate the talk. I'm going to go back and re-listen to that story you told about your house in Florida, and the small engineer in me wants to look at the numbers on paper because I think it's so fascinating. But the story makes so much sense. So, any final thoughts before we get out of here?
Well, a couple of questions. One, I know you're first of all, you're doing great in your business and your family life. I enjoy watching you, like I said. And you got a podcast that's reaching a market or multiple markets. So, who is your audience of your podcast that we're talking to?
Entrepreneurial-minded people that love their family and hate paying extra taxes, who want to have control over their wealth. I think 20 years ago, the idea of retirement is a lot different than it is today. Today, I know guys in their 20s making millions online. Why would they quit They're not going to retire, you know. And when they're 60, it's gosh knows it's going to be a completely different market for them 40 years from now. I think 20 years ago, people wanted to stop punching a time clock because they didn't like going to the office. And there's so much opportunity. So this podcast is for the people. Maybe they haven't taken a step out yet and going, I want to do something on the side. I want to quit the W-2. How do I invest in myself? And I have rules for that. You know, it's all part of the course that we have on our website. But yeah, so it's the people that want to take advantage and invest in themselves, and those who are successful in doing so. What are some opportunities in the market? And like you said, it's all about cash flow and control.
Very good. I appreciate you telling me that. That's a great market to serve. So here's what I would say directly to those people. There are rules, but you got to know what the rules are. You know, I think I heard you say this recently in one of your posts. It was, you know, most people are going through this life playing the Monopoly game of collect $200 and try to stay out of jail. But this financial life has more rules than that. But the pieces on your financial playing board, your Monopoly board, everyone has the opportunity to have the same pieces. To know how those
Hey, hold
pieces
on.
work.
I'm gonna pause for a second because your internet cut out. So we all have the same playing pieces. Then it cut out.
We all have the opportunity to play with the same pieces on the playing board. So we have to learn the value of each piece that we can own and how it works and what the financial physics are on the cause and effect. If I go into this product, what are the costs associated to getting in it, to keeping it, and getting out of it? Do I have access to it, or am I locked out of it? Most people are being taught to be locked out of their money, and they're being taught that by investment houses or Wall Street, the IRS, because most people don't like to pay taxes and don't know the incentives of the tax code, and from they'll say banks, from the banking systems, but they just want to keep our money. We loan it to them, and then they loan it out to everybody else, and we don't get to participate in profits.
Yeah.
If we can become those three players, you can't become the IRS, but you can follow the incentive of the tax code to your advantage. So you got to play. You either have to know the rules, or you have to play the game with someone who does know the rules. You, me, some others that know how to teach this process, so that they have an opportunity to win. If you're playing a game you don't know the rules to, and you're committed to it for life, and you are, their retirement plans that they're investing in it's not a retirement plan, it's a lifetime savings plan and income generator for Wall Street and for the government, not for them.
It's
The
cash flow.
cash flow, that's right. Cash flow is going to them, not to you. So you got to measure where's your cash flow going. So if you're going to build, one of the rules I would say is build cash flow to first meet from work that you don't have to go physically put hours into. Create income back to you that would first cover your normal living expenses. If you can do that, you're going to have a big advantage. That could be passive income. That could be dividends on life insurance. That could be rents from properties, royalties, whatever. That could be an online digital business, whatever that is. Until you can move into that role, what more money does is it gives you more options on your time. And when you look at your time, there's only a few things you can do with that too. There's 4 things you can do with money. You can invest it, save it, enjoy it, let's spend it, or give it away. That's all you can do with money.
Yep.
Time is going to go whether, no matter what, it's going to keep moving. So you're either going to enjoy it, invest in it to get something back to you on how you invest your time, who you invest it with, or you're going to waste it. So there's really only 3 things you can do with time.
I love
Time's
it.
going to go by. And what more money does is gives you more options on how you make that choice about time and who you spend it with.
Yeah.
Right? So don't be in your business and your investments for the purpose of working. You know, work to have a better life, save to have a better life, and then reverse engineer the life you want to have from the end to today. So if you
Yeah.
take care of the guaranteed event at the end, that gives you more permission to enjoy all the stuff you accumulate as you go.
I love it. Trent, thank you so much for being here. If any advisors are listening and they want to get involved in Trent's mastermind, It's very valuable. They meet weekly. We'll have links in the description below the podcast, so feel free to click on those and get involved with Trent. Trent, thank you so much for being here, man.
Thank you. I enjoy what you're doing. I appreciate what you're doing, and thanks for having me today.